Well, happy Monday. Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at Tesla. First, I just finished, I don't know, a couple hours ago, almost an hour and a half long session with members. I call it a training session because it is mostly training, though we did talk about some specific trades that we have going on. I encourage you, I'm asking you to be a member if you're not already. We're starting, I think it's on Wednesday. Somebody else is handling the marketing, a super sale between Wednesday and the rest of the year. And the prices have gone down quite a bit for members. That includes trial members. So, if you're not really sure about the membership, but you want to check out courses for a really, really super low price, then go ahead and enroll, and then you can cancel after you get the deal. Doesn't matter to me. It just kind of breaks my heart when somebody's not even just doing the basics in order to get from where you are now to where you want to go. So anyway, enough about that. I want to talk about Tesla today. And the reason is this is something that for a while now, my suggestion to our members is that I think the price is ultimately going to hit 100 bucks. And I'm not rooting against it. Frankly, I think what Elon's doing as far as owning Tesla is probably the biggest troll I've ever seen. Multi million dollar troll, or maybe it's a billion, I don't know. But with that said, the reason that I think Tesla is going lower is, number one, it's got a lot more competition. Number two, there's a real stigma, I think, associated with EVs and Elon Musk, because he has pissed off a lot of people. And that means that there are some people where they used to buy Teslas because of Elon Musk. Now there's a lot of people that are not buying Teslas because of Elon Musk. And one thing I know about this business, it's basically a subscription business. Stock Market Mentor is a subscription business at its core. So is a vehicle. You buy a subscription for a vehicle. What? You trade it in every 2, 3, 4, 5 years, whatever it is. But ultimately, you are subscribing to whatever the manufacturer is who you buy your car from. And so I think there's a lot of people that are going to look at Musk and say, you know what? I don't want to subscribe to that. And at the same time, there are investors, large institutions that are looking at this saying, well, wait a minute, this guy's totally taking his eye off the ball. I don't care about politics. I just care about money. And the fact that he's doing everything that he's doing on Twitter is not really helping me with my investment in this EV company. So there are a lot of things that are going against Tesla. And frankly, I can't think of one thing that I would say, oh, well, this is in Tesla's favor. I'm not saying it's a disaster, not at all, but I'm just saying if you are an investor, if you're a trader, you do understand that your advantage comes not from seeing things now, but from looking into the future and seeing things 5, 6, 7 months from now, because that's where you're going to make your money between now and then. The market anticipates future events. And if there's not going to be any good positive future events, stock's going to do what it's doing now, which is tail off, roll over. And that's really what we see here. And my measurement of 100 bucks isn't magic. It's just 100 bucks. Could be 150, but I think 100 bucks feels a little bit more like the deal. And so how are we going to capitalize on that? We'll go back to the daily chart. You can see that it's almost, well, in fact, it is the inverse of looking to buy a stock. When you see an uptrending stock, you want to draw a trend line and buy at the lows, sell at the highs. Well, when you have a downtrending stock, it's kind of the same. You want to sell at the highs, and then buy or cover at the lows. And so with this simple construct, and it actually is pretty simple, but people tend to overemphasize momentum. They think it's just going to continue and continue. What you wind up doing is wanting to short a stock when it breaks a key support level. And that generally doesn't work out real well because you've already given away a lot of the potential gain from this short sell. In other words, you are literally selling at the floor in anticipation that the stock's going to fall through the floor. And yes, it ultimately will. But, for example, let's say you decided you're going to short the stock here. You know, it did fall. It fell. Gosh, you know, it fell here. You're going to short the stock, but it falls down here. You short the stock, and then ultimately you're making good money. The problem is the stock ran up. Same thing here. You short the stock. Problem is the stock runs up. Why is it doing that? It's pretty simple. Stocks zigzag. That's what they do. And so you don't want to be looking at where this is now and anticipating that this is just going to continue. You need to be looking at it saying, okay, well, this is what we see. And if we're just literally looking at the resistance, we're looking at the support, we just need to wait. We need to wait for this thing to come back before we short the stock. I shorted it up here, and sadly, I covered. I made some good money on it, but not great money. And it was because I was playing these zigzags and just didn't really have the patience to ride through this stuff for various reasons. But I'm just passing that on to you because maybe my loss is your lesson. You want to wait for the stock to come back a bit. And once it runs at least up to test this 20-day moving average. Here, I'll take the other one off so we remove the ambiguity. Once it comes back to test the 20-day moving average, we'll call it maybe 15 points from where it is now, which shouldn't take too long. It's down 11 right now. Once this comes back here, that's when you short the stock. So I would be patient with this. I certainly wouldn't be buying this stock. It's trending down. Why do you want to be buying what institutions are clearly selling? And this isn't a panic sell. It's not like you're buying a big, massive puke and dump. You know, it's just a stock's drifting lower. So I want you to stick with this stock right now as something to watch, but don't be shorting it yet. Do not be buying the stock. The only trade here, in my view, the way I see it, is down. So entry is everything. Wait for yours. Okay, that's all I got for you. Once again, guys, we're going to start our end of the year run on Wednesday. I want you to watch for your emails, and hopefully we'll see you in a class. Talk to you later.